While house prices remained flat over January, rentals started to creep up again and vacancy rates started to creep down. So today, Dr. Andrew Wilson and I discuss the latest rental markets. We're also going to give you some thoughts about what's likely to happen with interest rates next week, including some of the factors that may make the Reserve Bank decide to put a hold on any rate change for a little bit longer. We're also going to discuss the auction results, which were very strong last weekend. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can update you each time a new show comes out. While house price markets have remained flat over the month of January, according to the latest My Housing Market rental report, capital city rental markets tightened with higher rents and lower vacancy rates. I'm looking forward to discussing these latest statistics with their chief economist, Dr. Andrew Wilson, as well as talking about what's happening to the cost of construction, the latest auction results, and I bet we're going to end up talking about inflation as well. Hi, Andrew.
Yeah, g'day, Michael. We're off and running well and truly into 2025, are we not?
Yes.
Um, we've had our second week of substantial auction results. We discount a lot of what happens in January. So that market's starting to take shape. The early season auction market is starting to take shape. We need a few more weekends to get a real feel for what's happening underneath in terms of those auction clearance rates. And as you said, we're really coming up to a really, I guess, certainly a much discussed meeting from the Reserve Bank in relation to interest rates. And we're going to have a look at some of the data that's important to inflation today, and that's house building costs. And our data is perhaps a little different to what the Reserve Bank has been discussing. So some interesting stuff, but of course the rental market, which hasn't, it's really seriously eased, and by easing I don't mean fallen. I mean it's not galloping along at the extraordinary rates that it had over the past 2 years. So it's consolidating, but we shouldn't be surprised at that, because just like house prices have affordability barriers, of course rents have affordability barriers too. Tenants can't continue to be paying 10-20% increases annually in rents, and that's what we've had over the last couple of years. So that's starting to moderate, and of course there are some actions by the government, a sharp reduction in the number of students coming into Australia now, and that would have certainly eased demand, particularly in those apartment markets in the inner city that are favoured by students, international students. So, but still, and of course, the other thing we have to mention is that the latest data reflected on what is a significant holiday period, December and January, and now we're starting to getting results at the back end of January, which are moderating in terms of the impact of seasonal holiday markets. So that means more demand coming in as students come back to school, and as people move out of the holiday mode and start thinking about their next move. So we can perhaps start with that, Michael,
Well, I
the
remember
latest
at the
rental
end of
data.
last year, as rent growth started to moderate, certain parts of the media were making a fuss about this is the end now. It's now all going to move towards tenants. Landlords have been greedy and now they're getting their payment back. But in fact, vacancy rates are still in general on the side of landlords, aren't they?
Well, they are, Michael. And as I said, we can't continue to support those extraordinary rental increases
No.
because tenants just can't afford it. It is that time of the year where there is less demand because of holiday distractions. And of course, we have had a moderation over the second half of last year. But again, that was to be expected because, we have never seen vacancy rates as low and as consistent across just about all capital cities before. This is unprecedented. And the government's, I believe, cut by nearly a third the intake of international students. Now, that's got to have an impact on demand for rental properties, So and that's what we're seeing. But again, the data that we look at today shows us that we're starting to see a moderation in the easing of rental markets. So we're getting back into the real swing of the business year, and over the next month, it'll be interesting to see what happens in February with the February result.
Sure. So let's look at what's happened to house rents first, Andrew.
Yes, well, as I said, markets have eased generally over the past 6 months, but the latest January data has actually shown a resuming of tightening. Again, we need to understand that this is following, or being influenced by the seasonality of January and December in terms of less demand. But we did see higher rents and lower vacancy rates generally for both houses and units. And as we discussed there, Michael, rental markets have improved over recent months. Vacancy rates have moved up, particularly for houses, and rental growth has eased. Not to say that it's not still growing, it's just the rate of growth has eased. But again, we've got to understand that those vacancy rates were so low that, it was just extraordinary. And rental growth was also extraordinarily high, no surprise. But the big picture is that markets still remain in favour of landlords, particularly for houses, with solid competition amongst tenants continuing for available property. So let's have a look at the results for houses. Melbourne was the only capital city with a decline in rents over January, Michael, compared to December, down by 0.4%. All the other capitals recorded increases over the month for house rents, with the exception of Brisbane and Adelaide, and they were steady over the month. And when we look at the annual increases, they're still reasonably heady there for Brisbane, Adelaide and Perth. Brisbane house rents up 6.6% over the year, and Adelaide and Perth house rents up 5.8%. Darwin, which of course is a volatile market because demand shifts around according to seasonal factors, up by 12.3% over the year. But when we look at vacancy rates, Michael, most, if just about all except Canberra, are at or below, still below 2%, at or below 2%. So no surprise that the lowest vacancy rates there are in Brisbane, Adelaide and Perth, and they're the ones that have had the strongest growth over the past year. And when we look at we can start to see, instead of vacancy rates on the rise, as we saw last month over December, we're now starting to see some moderation in those changes over the month to vacancy rates, with a number of markets recording lower vacancy rates. Still some upward pressure in some of those markets, and the Sydney market vacancy rate was steady. But once again, these vacancy rates are very low and certainly in favour of upward pressure on rents. When we look at units, a similar story with units. In fact, there was more upward pressure on or growth rates, higher growth rates for units than there were for houses generally. All capital cities recorded higher rents over the month, with the exception of Sydney, Brisbane, Darwin and Canberra, which were steady. So I guess, it was 50-50 there in terms of rises and steadies. Again, Perth up 1.6% over the month. Good result there for Melbourne, Michael, up by 1.4% over the month. Perth up 1.6, Hobart up 1.4. Small market, of course. Hobart tend to be volatile, those results. And Adelaide up 1.5%. And again, some solid results there over the year for rental increases for units. Adelaide up 8.6, Perth up 9.2. And Melbourne rents now up 4.5% over the past year, Michael. And we've definitely seen a resumption of rental growth in those Melbourne rental markets over the past year. And they've caught up with a lot that they were missing out compared to the other capitals during that 2023-2024 period. Vacancy rates are higher generally in the capitals compared to houses, although still quite low once again in Brisbane, Adelaide and Perth, under 2%, and well under 2% in Perth and Adelaide. The other capitals are higher than 2%. And even though Melbourne's seeing rental growth for units and rental growth over the year and over the month, its vacancy rate is still tracking at certainly higher than the other capitals at 3.6%. Sydney similarly at 2.3%. So notwithstanding those higher vacancy rates, we are starting to see some downward pressure over January on vacancy rates for units compared to the previous month. So I think, Michael, that's really reflecting the easing of the seasonal effect over December. And again, I think that there's that wavering that we see between houses and rents according to affordability. Sorry, houses and units according to affordability. As house rents rise, we see the shift in demand to unit rents, which are typically more affordable. So there's some mixed news, which is what we get at this time of the year. But I still think there's plenty of underlying demand for rental properties, Michael. And I think it's a little bit premature to say that we're entering a period where the energy is shifting or the advantage is shifting to tenants away from landlords. But it's, 1 month's figures, as we've mentioned, affected by some individual circumstances and seasonal factors, are not what you'd start to call, the emerging trend. But certainly the market is a lot less in favour of landlords than it was, but it's still very much in favour of landlords generally.
Well, at this time of the year, everyone's wondering what's going to happen with the interest rate announcement next week from the Reserve Bank. And there's lots of factors to take into account, not just inflation, but how our economy is going, how unemployment is going. But there's also various elements to inflation, isn't there, Andrew? There's the goods side, there's the services side.
Yes.
How are you seeing all this fall into place?
Well, we've got a number of factors, haven't we, Michael, that we have to look at when we're sort of putting that jigsaw puzzle together. I suppose you can't envy the Reserve Bank because it's got to make a call, and there are certainly shifting emphasis on particular factors. Now, I think it's pretty clear our economy is strong. Do you cut rates while the economy is very strong? Does that not only stimulate activity? Does that not only act to stimulate demand and therefore put upward pressure on prices? When we looked at the breakdown in prices, we can see in goods and services that goods prices are really almost zero inflation over the past year, Michael, which is obviously very low. But that's because we've seen a significant fall in the cost of electricity. Thank you to the government for that handout for the electricity bills, that $300 handout. And of course, we've seen a big decline in the cost of petrol, in the cost of oil. And that's driven a sharp decline in goods prices. And of course, we've just been talking about the rental market, Michael, and rents have started to are not rising at the same rate as they were, and they've flattened out over the last 6 months to a year. So they're the factors that are putting downward pressure on goods costs, but services costs are still tracking very high, uncomfortably high, well above 4%, Michael. And that would be a real concern to the Reserve Bank because services costs are typically driven in a strong economy that we have by, strong demand for higher wages and employers covering those higher wages in a strong economy, in a strong labour market by putting up their prices, and particularly for services because they don't have that sort of wholesale retail environment that goods have. So there are some mixed messages, and we're interested in Australia, Michael. And I think that there's another issue that perhaps we can discuss at some length at another date, and that's that we're still looking. The Reserve Bank is still saying it's looking at those quarterly inflation numbers. Even though it's well over a year now since we've had the monthly inflation numbers, the ABS responded to a lot of criticism and a lot of pressure that Australia seemed to be on its own in advanced economies with having just a quarterly inflation number and not a monthly inflation number, such as the Europeans, the UK and the US have, and they rely on the monthly number for their interest rate settings, for their inflation number and their interest rate settings. And we're still looking at those 3 monthly numbers, those quarterly numbers, which means we are looking backwards. And the Reserve Bank has continued to say that they think that the quarterly numbers are more reliable. So, hey, why can't the ABS come up after, a lengthy period of time, really, with a monthly inflation number that can be the standard for the Reserve Bank's discussions on interest rates? Michael, I think this is quite a concern going forward, because you don't want to be looking back 3 months for your
No,
inflation number, particularly if you're changing the cycle into a cutting cycle. You want to be sure of that. And particularly given there are so many mixed drivers, as we've already discussed. But along with a different measurement environment, Australia also measures its housing costs differently to other jurisdictions. Australia housing costs in the CPI, in the inflation rate, are measured by rents, and that's not just asking rents. And we've been discussing asking rents here; it's total rents. And asking rents tend to lag what happens with the ABS rents tend to lag what happens with asking rents, because they're total rents, Michael. They're rents where leases are being turned over, and they're not new rents per se. So it does take some time for the market to catch up with, or the total rental market to catch up with what's happening with asking rents. Now, the other factor that the ABS use for its housing costs are building costs for houses, not for apartments, but for just houses. So that's what they use to measure house costs. Now, it's different to what happens in the US and in Europe and in the UK. So it's a sort of a different measure. And that's why we look at and concentrate here on those, the My Housing Market House Building Index, House Building Cost Index, because it's a clear indication of what's happening with housing costs according to the ABS. So let's have a look at our latest index, Michael,
yes,
in regard to house building costs. So this index is derived from ABS building approval data. It looks at the value of building approvals for houses, and it looks at the number of building approvals for houses on a monthly basis. And then it converts it into a per unit basis. So basically, we're dividing the value by the number to give us a per unit basis index. And then we advance that or calculate that over a 3-monthly period, a quarterly period, and then we do it month by month as the quarter advances. And it's been a very resilient measure, and it has certainly compared to other measures in the marketplace. But one of the factors that the Reserve Bank has discussed recently is that it believes that house building costs have started to, or the rate of growth had started to ease, and that was a positive sign for them. But our data is now conflicting with what the Reserve Bank is saying, because over the last 2 months, with the quarterly rolling house building cost index, we've actually seen an increase, Michael. And when we look at the annual increase over the quarterly set on a month-by-month basis, I haven't lost you, but it's now up at 5.1%. It had fallen under 3%. So just over the last few months, we're starting to see some upward pressure on house building costs. Now, as I said, the Reserve Bank have been saying, well, they're tracking the opposite. Now, maybe it is about those quarterly data sets, static quarterly data sets that they're looking at, and that they have yet to catch up with the latest data, if you understand, because our monthly data is definitely showing an increase in house building costs as it relates to the CPI. And the other factor which sort of supports that is that we're starting to see, interestingly, as we discussed last week, Michael, some softening in what's been a strong year for house building approvals. We're starting to see house building approvals starting to fall away. Now, perhaps higher house building costs are about the industry trying to recover reduced demand. But as I said, this will pan itself out. But again, what this illustrates is it's certainly a mixed mixture of data that the Reserve Bank has to consider. So it's not a sort of a done deal, a no-brainer in terms of the data. It's very much, if you've got a particular view, you've got data to support that either one way or the other, at the moment. And it will be very interesting to see not just what the Reserve Bank does, but how it discusses or validates that going forward. But, again, house building costs, according to our data, are moving in the wrong direction, to sort of validate that this is now a factor of the inflation rate that's under control, even though rents are certainly not growing at the rate they used to.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. We'll see what the Reserve Bank comes up with next week, and I'm sure we're going to have lots of discussions about that.
Yes.
We had another positive weekend for auction results. How did you at My Housing Market measure those results, Andrew?
Well, the second week of the season, in reality, I mean, as I said, we're now into February. That's when the market starts to grow, and we can really gauge with some more certainty the effect or what's happening in the underlying nature of the market. And it was another, generally positive week, Michael, particularly for Melbourne and Sydney, and Melbourne's looking a little bit better early days this year, Michael. I emphasise early days, with a surge in listings, and both markets are tracking in terms of listing numbers above last year. After the first week, there was some discussion that listing numbers were falling behind compared to last year, and of course, it was just too premature to be making those assessments. But now we're seeing, a pickup in the actual number of listings. So let's have a look at the results. Big weekend, considering the second weekend in February, Michael, of auctions in Sydney. 785 auctions. Good clearance rate there.
Yes.
76.8% for Sydney. And that followed up that 72.6% the week before. So some good early week results there for Sydney. Auction numbers well above where they were over the same weekend last year, Michael. And the clearance rate, similar, very similar to where it was last year in Sydney. And that market started off quite strongly last year. Of course, we must emphasise we're still early days here, and we need to start picking up the next couple of weekends just to see if we're going to consolidate this. Melbourne, again, a big rise over the week in auction numbers. No surprise there. 640 auctions in Melbourne, higher again than the same week last year. Another plus 70% just. Clearance rate in Melbourne, 70.8%, a little lower than the weekend before, 74.3%, and not too far away from the same weekend last year, Michael. Rise in auction numbers in Brisbane, but a falling away of the auction clearance rate for Brisbane, with a big week of auctions, and well above auctions of the same week last year. Adelaide auctions were lower, and a very similar auction clearance rate, again above 70%. And Canberra, good numbers there in Canberra, and another quite a reasonable result there for Canberra, Michael, 59%, higher than the same week last year. And auction numbers were well above where they were a year ago. So I think overall these are pretty solid numbers. We always discount Brisbane to some degree, Michael, because it has a different auction culture. But I would suggest that Melbourne, Sydney and Adelaide above 70%, and Canberra, still pushing towards 60% in a market that has been flat over the past year. So, and good auction numbers, Michael, good strong auction numbers for the second week of February. So I guess we await to see what happens next week, as usual, to see how the market evolves. And where we look at the monthly results, we can see there still in Sydney, good results there. That should be February at 75%, lower than, that's for the full month so far, lower than the 77 last year. Melbourne's actually tracking higher than February last year. Brisbane a little bit lower. Of course, it was a very strong start to the year last year in Brisbane. Adelaide around about the same, and Canberra a little higher than where it was last year. So I think there are plenty of positives there, Michael, over the first 2 weekends. But as I said, we look forward to the next few weekends to see how February finally finishes up. And of course, part of that story will be what happens with interest rates. So that will be interesting to see if there is a move, if it has an effect on auction results. But if
Well,
you're
it
looking
won't
for
just be
those
the fact that
snapshots,
interest rates may be lower, but it's also the confidence that it instills that, okay, I can make
absolutely.
my property decision without worrying that it's going to cost me more. If anything, it's going to start costing me less moving forward. People are waiting for that news, aren't they?
Yeah, and it'll activate buyers rather than sellers, because sellers are already in the game with an auction because they would have decided that weeks ago.
Yes.
But sellers might be more motivated because they'll be thinking, hey, I better get in before prices start to rise, as they typically do with lower interest rates, because that improves affordability, particularly in a strong economic environment such as we have at the moment, and strong housing market activity generally over the past year continuing. As you said, confidence is still pretty high. So if you're looking for those results for the auction markets, My Housing Market produces them through my LinkedIn account, Dr. Andrew Wilson at LinkedIn, around about 6 o'clock every Saturday for the snapshot of the capital city results. And the full national report is released. Michael sends that out on a Sunday, and that has the regional breakdowns for Melbourne and Sydney and the top 10 suburbs sold under the hammer for each of the capitals over the week. So another interesting week, Michael, and
Yep.
I await bated breath next week's
Look forward to our chat next week, Andrew.
discussion. Thank you, Michael.